Today I'm taking a look at Boohoo. Boohoo's an online fashion retailer who in the last year or so have bought up the rights to the Debenhams brands on the online side, not the actual physical stores, and have been looking at expanding into the USA. It's a lot of men's and women's clothing, really aimed at sort of the 19 to 30 sort of marketplace in terms of age. And never apologise for loving yourself. I think that could be quite true for Boohoo at the moment. Let's have a little look down here. There we go. It's definitely the age of self-love for Boohoo. As we take a look at the share pricing here on SharePad and see what's been going on. They've had a nice big high up at 400 pence per share, and it's just been declining since then. Let's have a look at more recent things over the last 6 months. So you can see the slide there. Now, I think for a lot of us YouTubers, we all thought about this sort of 180, 190 mark. Great share price for Boohoo, fantastic deal because it's been such a great growth company in the last few years, and it just seems to have dropped from there. And over the last couple of weeks, it's dropped down to that one. It's just been more of a downhill plummet. I took a position in about the 107 mark. It's sort of slid from there a bit more at a bit under that, a bit more of the mid-90s. And this morning we saw it drop as low as just under the 86 pence per share mark, and then jump back up to about 92. So it's been quite a slide for Boohoo. So it seems well underpriced at the present time. But there was some news this morning that Barclays have had a downgrade on Boohoo and downgraded it with a target price of 85 pence per share. So there may be more downside to come if Barclays are correct on that. Turning to Boohoo, Johnson noted the company's announced plans to open its first international warehouse in North America in 2023 at its interim results. However, given the pressure the US delivery proposition is currently under, management are considering options to expedite this. Boohoo will need to invest in order to rebuild its US and international business, given the market share losses it suffered during supply chain disruption. This involves downside risk to profitability in the near term, given the marketing investment required. So that's the sort of summary, quick top line there of what Alliance News for Barclays have got to say about it. So let's have a little look at my little sums and see what we've got. There we go. All right, so using the figures from Yahoo Finance, I've tapped them into my spreadsheet, and this is what we're coming up with. So in terms of turnover, it's been growing quite steadily, actually, in real terms. But the profitability we see here has been taking a dip over the last year or so. Whether that's got any Rona implications in there, or the supply issues that as with many companies are seen as the knock-on effect, is having quite an effect there. Free cash flow. Free cash flow is actually going up quite healthily at the present time. The reason why the DCF calculators really won't work for free cash flow at the moment is that the level of the capital expenditure is extremely heavy and is outweighing the free cash flow quite dramatically. So it just means it comes up with negative values. So it's really impossible to come up with some sort of calculation there. Assets versus liabilities. Again, they're growing, but the assets have been growing, so has the debt mounting alongside it. So the outlook for Boohoo in the short term certainly looks a little bit on the negative side. So we may see some more pain to come. But if the worldwide market starts to turn around and the US operations get going, things may reverse completely into 2023. But I don't know. It's going to be very hard to tell. But long term, I think Boohoo has always been seen as a good growth business, but it seems to be having a few little problems at the moment. I'd like to hear your comments, so put some comments down below, and let's see what you think. And we'll catch up with you all again soon.